Hey Parallax traders, this is Imri and welcome back to another YouTube video where I'm going to break down a trade that we've taken this past week. It's unfolded pretty much exactly according to plan, and there's a really cool educational component to this video as well. So we're going to cover how to trade a fourth wave triangle. We're going to cover some trade management stuff, and most importantly, we're going to go over what I call the pre-flight checklist. Now, your pre-flight checklist does not have to look exactly like mine. All right, it can vary trader to trader. I don't so much care what's on your pre-flight checklist as much as I care that you have one. Okay, having a checklist, and mine is here, right? These 4 questions. What's the trend? What is the pattern / market structure? What does momentum analysis tell me? And then finally, what is my test? Time frame, entry, stop, and target. For me, this is a very logical flow. And because I use the wave principle as the foundation for every trading decision I make, this complements the wave principle very, very well. So I'm going to back up and we're going to take a look, at how prices unfolded, once they came out of this triangle. So we spotted this triangle forming earlier in the week, and we came up with this pre-flight, or we went through this pre-flight checklist, and we ended up with a green light. So let's go through it. All right, what is the trend? Well, because we're counting an unfolding impulse in 5 waves to the upside, the trend is bullish. All right, question number 2, what is the pattern? What structure is the market tracing out? Well, we're in a 4th wave, and the pattern that the market is tracing out appears to be a contracting triangle. Okay, so we've covered number 2. Number 3 is momentum analysis. What does momentum analysis tell us? Well, I think momentum analysis looks very clean for this particular pattern on a 4-hour chart, but we'll take a look at some other time frames as well. So we can see here on this 4-hour chart that the MACD found support right at that 0 line and started to cross up. We also see some minor bullish divergence here in the MACD histogram. We can see the MACD histogram itself slowly trading higher. We can see that RSI has broken above the midpoint line of 50. So that's an indication of bullish momentum. Let's take a look at the 1-hour chart now. And we have very similar momentum readings here, all right? Where the MACD started to trend positive, and I realize it started to dip a little bit lower here, but we're going to analyze momentum again as we get closer to our entry point on this triangle. So momentum for the large part looks bullish, especially on the 4-hour time frame. On the 1-hour time frame, it's a little bit more of a mixed bag, but we also haven't reached our entry point on this triangle quite yet. So I'll say momentum gave us a check mark, and we can move on to our time frame, entry, stop, and target. Okay, so time frame, let's see how long it took for wave 1 to play out. Wave 1 took about 12 hours or so. So because wave 3 is likely to be our extended wave here, I'd assume that wave 5 is going to take somewhere similar, 12 hours, maybe a little bit longer than that, maybe a day and a half, somewhere in that region. The entry point, well, this is what I'm going to be giving away to you guys in this video. So the entry guidance for a triangle, in my opinion, the best way to trade them is to enter on a break of the wave D extreme. And then you're going to set a stop at the wave E extreme. And then in terms of targets, so that wave E extreme is going to be down here. And then in terms of targets, I like to use a combination of channeling and Fibonacci relationships. So we're going to draw our final channel. Actually, let's play the price action forwards a little bit so we can get that wave E extreme. Okay, so the wave E extreme is right here. And we can now draw our final channel. So you can see at this point, the trade would have been triggered because we broke in past that wave D extreme. Okay, so now we can draw our final channel, and we're going to look at the Fibonacci relationships between waves 1 and wave 5. So a common Fibonacci relationship, if wave 3 is extended, is for waves 1 and 5 to be equal to one another. So I think this is a very reasonable, high probability target. Now, targets can be fluid. All right, I believe that once you're in a trade, you should also follow some risk management steps. The risk management steps I like to follow are very simple. Step 1, look to reduce risk. Step 2 is look to eliminate risk. And step 3 is to protect open profits. All right, so this is a big myth that's been told in trading time and time again, and it drives me nuts. You do not need a very high positive skew on all your trades. You don't need to aim for 10-to-1 risk reward trades or 4-to-1, right? That's the equivalent of swinging with all your might in the hopes of hitting a home run in baseball. And if you swing with all your might and you try to hit a home run on every pitch, you're going to strike out more often than not. I think what's far better to do is to learn when you can expect a home run, learn when it's maybe unreasonable to expect a home run, and play the cards that the market has dealt you. And if you don't like the cards that the market has dealt you, fold and don't trade. It really is that simple. All right, patience pays. Now, when we're trading for a fifth wave, I don't think it's reasonable to really expect a home run. So we're going to manage this trade accordingly. I'm already out of the trade, by the way. It's the weekend, and I'll show you in a couple minutes, what I was looking at this morning that got me out of the trade. But in any case, there you have it. We have a target here. It's somewhere between the midline of the final channel and the upper boundary line of the final channel. But I'm going to respect that midline as well, as you're going to see. So what happened was we kind of chopped around in this trade for quite some time. As you can see here, we briefly even dipped outside the final channel, but we bounced right back up, which is encouraging. And then we got into the heart of this fifth wave, wave 3 of 5. Okay, so it's at this point that I'm looking more closely at momentum. And if we rewind to where we broke above wave D, now we are getting our positive momentum readings. Well above the 0 line in MACD, we have a bullish cross, and we're well into bullish momentum territory as well on that 1 hour chart. Okay, so as we trade into the midline of this channel, that's where I'm thinking, all right, it might be time to take some profits here. We got a nice run out of this trade, very nice run indeed. But we've pinged off the midline of the upper boundary line of the terminating channel, right? It's a Friday. We're getting an overbought reading in the RSI, a double overbought reading, and we're seeing some daylight here between the MACD and the signal line, all right? So that's a warning to me, at least, that momentum might be getting exhausted. Now, also, we have to remember that we're in a fifth wave, and we've exceeded the high of the third wave in this sequence. So we've completed the minimum requirements as far as I'm concerned for this fifth wave to be over. So it was somewhere around this time that I was out of the trade. And again, let's calculate roughly the return that I got on the trade. I don't think I got out at the very high. In fact, I know for a fact I didn't. It was probably somewhere around the 143.0203 area. So that still equates to about 175% return on my initial investment. I'm phrasing that very intentionally. I'm not saying I got 1.75 R against 1 R. I'm saying 175% return on my initial investment. That's how I think about trading. Each trade is an investment. What's my ROI? There aren't a lot of investments out there where, okay, let's see, how long did it take? So we got in this trade, on August 17th it triggered, and we got out on the 19th. All right, so less than 2 days. I don't know, around 2 days. I don't know of too many investments where you can get your principal back. So in other words, 100% of your money back plus another 75% in pure profit. Well, I guess minus the brokerage fees, et cetera, and spread, but close, let's just say gross 75% profit. I don't know of too many investments out there that will allow you to see those kinds of returns. So no, I didn't make 10 to 1 on this trade. I don't need to make 10 to 1 on this trade in order to have a good time. I know I'm going to hit those trades when I'm trading for the heart of a third wave, for a 3 of 3, which is every wave trader's dream, right? But I can only play the cards that I'm dealt. And right now, the cards that I was dealt was a triangle fourth wave. All right, so play for that fifth wave. I'm out. It's the weekend. I don't have to worry about this trade anymore, and I can revisit on Sunday evening when the market opens up if I really want to. So I hope this helped you show how we take a wave count and turn it into an actionable trading opportunity by following this pre-flight checklist. So what was the trend? What was the pattern? Let's take a look at momentum, and then let's figure out our time frame entry, stop, and target. Thanks, guys. Hope this was helpful. See you soon.